Can we take a minute to appreciate Icy Hot and how great it is? And also to say that you shouldn't go to the gym because it makes you super sore, okay? Glad we're on the same page. Over the last few months, I've been digging into a lot of financial statements from various companies, and I've been looking into the more business side of this industry to try to figure out why gaming companies are doing such seemingly stupid things, such as Anthem's botched release and seeming sacrifice at the feet of gamers, and then also other releases that don't make any sense, such as Fallout 76. What the hell were they thinking? And to be honest, one of my biggest pet peeves in all of existence is when YouTubers who don't know what the hell they're talking about,
the kettle is calling the pot black,
try to attribute some sort of malice or ill intent to a situation when they don't know that that's the case. So for instance, when Fallout 76 had a botched launch, people thought of it as clearly this company is trying to take advantage of its consumers, they're evil, they're bad, money grubbing capitalists, whatever. But honestly, like, usually there is a reasonable, however flawed it may be, reason as to why these decisions were made. It doesn't mean that it isn't stupid. It doesn't mean that that wasn't a terrible decision. It just means usually there's some sort of rhyme or reason as to why these companies are doing something. Once you figure out what that rhyme or reason is, everything starts to fall into place, and you can actually diagnose the sickness as opposed to just criticizing people for the symptom. So obviously one of the biggest shifts that's happened over the last 5 years or so in the gaming industry is the uprise of always online games, of microtransactions, loot boxes, this sort of idea that a game can't release completed and has to be released partially and then filled in with all sorts of patches and expansions over the course of years and years to come, so that there's a constant revenue stream and everything continues to make money. Now, obviously, a lot of games have had this sort of approach before. Even World of Warcraft and older online games had this approach to pricing models and to holding on to their customers and having one game that these players were obsessed with for a long period of time. But that isn't necessarily what we're talking about. What we're talking about is this specific form of monetization of a product that's very new and highly predatory. I mean, we've come a long way, but back in the day, especially 5 years ago, around 2013, 2014, the idea of buying only cosmetics was fairly foreign. You were able to buy a lot of in-game boosting abilities, a lot of in-game affecting items, and occasionally that'll happen today, but when it happens today, there's a huge uproar and it becomes a national or international story, as we saw with Battlefront 2. But what I realized as I dug in deeper and deeper and deeper is that one game in particular is responsible for effectively all of the predatory practices that have come after it. Not because they directly practiced these things, but rather because they showed that these predatory practices could be abused and players could fall for it as long as the core game were interesting enough. Of course, I'm talking about Grand Theft Auto 5. I don't think that comes as a surprise. Now, obviously, when the game launched, the single-player campaign was a major focus. In fact, there was even talk of single-player DLC being a major focal point of Rockstar's focuses moving forward as the game matured after it came out. However, it became very clear after the game launched with an online mode that their focus was being diverted. The reason it was being diverted is because the online mode was not just fairly difficult to manage, but also incredibly popular and highly profitable. And this is where I need you to think in a business form. As you guys know, I study business, I study corporate finance and corporate marketing in school. I find it interesting and fun. And so I need you to think with that process right now. If you are a major corporation with billions of dollars on the line and you have these two projects you could pursue, on the one hand, you've got more like single player DLC. Say it's a one-time payment. Players pay maybe $10, $20 for an expansion that adds a few more missions and a couple characters that are kind of fun and interesting. Maybe there's aliens, something like that. It takes a lot to work on, but it's there. Or we can release this product, which is smaller in scope. It's a couple of cars, maybe some cool cosmetics, maybe it's something as simple as just having shark cards that offer in-game cash that you can then spend on whatever you want. And then we price those at $2, $3, $4 a piece. And those go out to millions upon millions of people who are playing the online game. Obviously, looking between those two, the easier option with the higher potential for revenue and for butt tons of money, you're going to choose that project. You'd be crazy not to. Now, should they have released single-player DLC? Obviously, I would have liked to have seen that, but as a business with only a set number of employees, obviously, I would say, in terms of business, they probably made the right choice. In fact, I wouldn't even say probably, I would say definitely, especially with the news coming out last year that Grand Theft Auto 5 has become the single most profitable piece of entertainment product in the history of mankind, selling over 100 million copies and grossing over $6 billion by itself. Now, sure, the game launched with great reviews and a lot of people bought it for the single player, but as the years have gone by, people are buying it for the online mode. They just are. And once they get into the online mode, they're spending even more money time and time and time again. And that's where Rockstar separates itself from its competition. They have great single player campaigns, but then their online stuff takes it to a whole new level. For instance, in the financial reports for Rockstar's parent company, Take-Two Interactive, you can actually break down how they make their money and how they define where their money comes from. And in this report by The Motley Fool, they actually describe it in detail. Quote, Take-Two Interactive provides a breakdown of its revenue into two buckets, full game and other, and also recurring consumer spending. In other words, microtransactions. They go on saying, quote, over the last 9 months of Take-Two Interactive's fiscal year 2018, 63.5% of its revenue came from full game spending, while 36.5% came from recurrent consumer spending. The difference in the company's most recent quarter was even more pronounced, with those figures tallying 76.3% and 23.7% respectively. Now, the latter point doesn't really come as a surprise. Of course, with the launch of Red Dead Redemption 2, which sold millions upon millions upon millions of copies, even just in the first few days after launch, you would expect for single game sales to see a huge spike and then proportionately microtransaction spending to take a smaller portion of the pie after that. However, because of this fact that percentage of recurrent spending dropped, Take-Two's stocks have actually plummeted in price. Now, of course, there's a lot of factors going into the stock price, but one of the biggest things about stocks is that they are sold on the presumption of growth and future profitability. And the second that thing gets thrown into doubt, everybody sells or the price drops because it has to correct. They aren't willing to take that risk if it's not likely to return a profit. In fact, let's explain stocks a little more basically so that everybody knows what we're talking about. When a company sells stocks or shares of itself, it's selling equity or a piece of pie in that company, and they're selling that for cash that they can get in order to fund their own projects. But what you get in turn is a little piece of that pie, and you can take that piece of pie and sell it to different people on a stock market, or in this case, a secondary market, because it's after the initial public offering. An IPO happens on a primary market. All of these stock trades between like you and me happens on a secondary market, like the NASDAQ or something like that. And so once that initial public offering has happened, I have a piece of paper that says I own this much of this company and I can sell it to you for whatever price we agree to. It could be 50 times higher than what the general populace agrees to sell it for, or it could be 50 times less. It just depends on what these two parties agree to sell it for. And that's where the important part comes in. They aren't selling it based on the quality of the product or based on how ethical the company is. They're selling it based on the prospective potential gains that they could make from it, whether that's in the form of dividends or earnings per share, or that's just as simple as the prospective trading it to somebody else a week from now. But furthermore, this only works as long as everybody agrees that the company is heading in the same direction. That's why when Tesla just the other day announced that they were going to have a $35,000 Model 3, everyone freaked out and sold their Tesla shares. It dropped from $320 per share down to $295 just because not everyone was on the same page, and they were freaking out thinking, are we the premium manufacturer or are we the budget manufacturer? Just that little bit of uncertainty and the worry about lack of profitability caused the shares to drop that much, which might not seem a lot, 320 to 295, but when you're talking about thousands upon thousands upon thousands of shares, you're talking millions upon millions of dollars. And if you're thinking, you'll realize this also creates a lot of tension between not just the employees of the company with the shareholders, but also between the managers and the shareholders. For instance, if the shareholders are only interested in the potential gains of the stock, because that's the only way they're going to continue making money, then they want to make sure that the company is taking the steps that will only cause future growth to occur. They don't care about the quality of the product or how artful it is or how meaningful the project is. They're only interested in how they can boost that share price or the dividend that they receive. That's why most high-level managers, for instance in EA, an overwhelming majority of their managers get stock options, or in other words, they're paid for their labor with a chunk of the company that only has value if they continue growing it, which is how they align the interests of the managers with the interests of the shareholders. Difference being, of course, the employees aren't compensated in this way, at least not usually, unless you work for like New Belgium, which is the local brewery here in Fort Collins, Colorado. They're a B Corp, and so they are owned by their employees, and it's just different. EA is not operated in that way whatsoever. Now, with this knowledge, I want you to look at this chart. This chart compares EA stocks with Take-Two Interactive stocks with Activision Blizzard stocks, and it compares them going back exactly 5 years from the point where I'm recording this video today. The exact price they're trading isn't as important as the general trend because there's a lot of stuff that goes into that, but in general, you can see the rough outline of the stock price and the shift is actually fairly uniform. They all go up at roughly the same rate, and some of them are more jumpy and jittery than others, specifically EA, but in general, they follow the same rough trend line. Now, one of the interesting things about this chart, and I encourage you to try this, as you go through and you see each of these big spikes or dips relative to the stock price of the company, you can actually set that to a specific date and understand why that happened. You'll see EA started to grow a lot faster than Take-Two and Activision, specifically around the time that they started to get much more predatory in their pricing practices with loot boxes, with microtransactions, and the like. While gamers were frustrated and getting really pissed off that they were doing this, they were still making money, and the shareholders looked at it and said, well, the potential for the money is there because their business is growing, and especially when you look at how much of the business is in this recurrent consumer spending, as much as 25% to 33% depending on the year, you can understand why shareholders were much more excited about EA than they were about Rockstar. I guess I should say Take-Two because Rockstar is a subsidiary. You get what I mean. But as you can see, gamers have started to revolt, and they've started to say, no, we're not going to pay you for these predatory products that don't actually improve the gameplay experience. They just make it worse for everybody. You're taking chunks out of the game and reselling it to us later. Now, one of the big stories over the course of the last few months in the gaming industry and in the finance and stock trading world in general is that gaming has been seeing a huge correction. As you can see on the chart, the price goes from trading around $140, $145, and it drops all the way down into the 80s. And that price correction was for a lot of reasons. I've done a video talking about it. You can see it linked down below or see the card up there. Some people were foolishly calling it a gaming crash. It's not that, it's a correction. And the reason it's a correction and not a crash is because a crash is when everything collapses, right? A correction is when everything falls back into its natural order. As the stocks shot up for all of these companies, what was actually happening was that shareholders were looking at the companies and they thought that this trend could follow forever. That as these companies were getting more and more predatory in their pricing practices, gamers would just put up with it and they would keep making money. However, what we've seen is that gamers have actually stopped buying the game when that's the case and started looking elsewhere. They value their dollar and they're rationally self-interested. So they're willing to go to other games that treat their dollar with more value, and it's not as simple as initially thought. Now, does this mean that online gaming is going away? No, it just means that they're going to change it until consumers respond to it in the way that they want, and until consumers are purchasing the loot boxes and the game and playing it and having a great time. And when this happens, the shareholders reward the company, which is why EA stock has actually risen over the last 3 months, despite Anthem crashing and burning. And it's only because of Apex Legends. Initially, when Apex Legends came out, I was trying to figure out why they released this game right before Anthem. Now I see why. Now I think it's very clear why. This game saved them financially because everybody's playing it, everybody's having a great time buying the loot boxes and buying the cosmetics and having a great time because it's a polished, high-quality title. And they just kind of forget about Anthem. And so I guess my conclusion for all of this stuff we've talked about would actually be fairly encouraging. And I think it's that we're through the worst of the microtransaction predatory pricing crap that's happened. As you can see, the market corrected. The expectation is now in line with reality. Investors aren't expecting EA to keep making money at the same rate that they were before, because gamers are getting smarter to it. They're getting pissed off about it, and they're just not putting up with it as much as they used to. And that's a good thing. That's something we should all praise and laud each other for, because it's helped this happen. Yes, when stocks drop, it's always a bummer because lots of people lose lots of money. They lose their savings. They can lose their retirement. Stuff happens that's bad when stocks drop. But this represents a correction in the market in terms of expectations. So now the expectation for these mega corporations isn't, for instance, NBA 2K18, where everything has to be priced at unbelievable levels, and the second you use it, you can't use it again. Terribly predatory practices. That's not the expectation anymore. Would they like that to be the ideal world? Yeah, where we can just charge whatever and people will pay it? Yes, of course, they wish that were the case. But now the expectation is in line with reality, at least a little closer than it was before. Thank you for watching. Honestly and truly, I appreciate it. If you have any thoughts on this stuff, leave those down below. I will be reading all of the comments. And as always, if you want to contact me directly, reach out to me through the Discord or through Twitter or any of the social media feeds that we have. All of that will be linked down below. I'm going to keep applying Icy Hot because it's good for you and it feels nice. So, bye.